Right, so this question deals with closing journal entries, specifically in the general journal. You've got your description, you've got your debit amount and your credit amount. Now the first thing that you'll have to do is to only identify those accounts that need to be closed off. So you'll see here we have not closed off any of the equity accounts, neither any of the asset accounts or the liability accounts. We're only closing off my incomes, expenses, dividends and income tax. So let's have a look at the solution here, and you'll see that my sales figure has got a credit total of 658. So to close off a credit total, I need to record a debit against the sale account of 658. Let me just show you how this looks on my general ledger. You'll have your sales account in the general ledger. The sales account will have a total of 658,000, which we're going to close off by recording 658,000 on the debit side. Now the account that we're going to close off the 658,000 to is called the trading account. Right, once my debits are equal to my credits, I have effectively closed off the account. So if I draw my trading account here, for every debit there needs to be an equal credit. So I'm going to have 658,000. I'm just going to indicate the 1,000 with the apostrophe, and this came from the sales account. Alright, so I've effectively debited my sales account with the 658 there, and I've credited my trading account with the 658 there. So if we record this as the journal entry, we're debiting the sales account with the 658, we're crediting the trading account with the 658, and we just fill in our contra account details here. This one says, maybe you can't read that one says trading. Good. Let's look at the next one, cost of sales. This is now just the opposite. Instead of having a credit, we're going to have a debit. Right, so to close off a debit total, we need to record a credit against that specific account. Cost of sales is a debit, so to close off that debit, we need to record a credit. Let's have a look. So I've got my cost of sales account here. Cost of sales. We have a total of, let's have a look, 387,059. 387,059. So to close this off, I need to put an equal amount on the credit side. I'm just going to use a different color. 387,059, and the account that we're going to close off cost of sales to is my, you'll see here, the gross profit we close off to the trading account. So sales and cost of sales goes to the trading account. Alright, so this is also going to go to the trading account. Right, this is the credit, so the trading account obviously needs to have the debit. Right, so 387,059, and that comes from the cost of sales account. Right, so there's my closing entry, debit and the credit. And if we go back to the question, that's what we had here. We've debited our trading account with the 387, and we've credited our trading account, our cost of sales account, with the 387. And my debit total is equal to my credit total, so we've effectively closed off cost of sales. Right, if we take one of the next ones, rent income, this is an other income. This is not going to be forming part of the gross profit of the entity, but it will affect the net profit. So if it affects the net profit, it's going to be closed off to the profit and loss account. So everything that affects the net profit, which is my other incomes and my other expenses as well as my trading account, but we'll get to that, is going to be closed off to the profit and loss account. Right, so we've got rent income here in my general ledger. Looks something like this. Rent income. We have a total of 481,200. All right, there's my total, 481,200. Now to close this off, we're going to have to record a debit on rent income. So let's use a different color. 481,200. Which account do we close this off to? It's going to be my profit and loss account. So let's draw the profit and loss account here. Right, so that was a debit to rent income, so profit and loss will have to be credited with the 481,000 Rand. My details is going to simply refer to the account that was closed off, rent income. Which account was debited? It was the rent income account. Which account was credited? Profit and loss. That's what we're going to do. We debit my rent income account 481, we credit the profit and loss account 481. Quick and easy way, it's got a credit total, so to close off a credit we need to put a debit rent income, and the account will be closed off. The same thing for commission income, exactly the same principle follows there. Then if we look at one of our other expenses, there's many of them: insurance, advertising, audit fees, directors fees, stationery, packing materials, rent, water and electricity, bad debts, not dividends or income tax, but also depreciation and provision for bad debts. All of them are going to be treated in exactly the same way. They've got a debit total, so to close off a debit we're going to record a credit to that expense. So let's take insurance as an example. Here we've got insurance. Insurance has a total of, let's just have a look, total of 27,000 Rand on the debit side. So to close off a debit we're going to have to record something on the credit side of this account. So we're going to credit insurance, which is what we're doing here. We're crediting my insurance with the 27,000. So insurance is being credited. I'm going to take this to the profit and loss account. So my profit and loss account will have a debit of 27,000 Rand, and I'll have to refer myself back to the account that was credited, which is insurance. I've closed off insurance. And you're going to do the same thing for all of your other expenses. Credit the expense because it's got a debit total. To close off a debit you need to put an equal credit. So you've got a debit of 27, put an equal credit, and the account is effectively closed off or zeroed out, and it's been taken to the profit and loss account. You're going to do the same for all your expenses here. Alright. The only accounts that we have not yet looked at is my income tax account and my dividends account. Now these two accounts are going to be closed off to the appropriation account. You'll see that we use the appropriation account to close off our income tax, our dividends, as well as to figure out or calculate the amount of the net profit that we're going to retain in the business. So let's close off my dividends and income tax. Since these two also have a debit total, we're going to close off a debit total by, these two, dividends and income tax, we're going to close off the debit total by recording a credit on that specific account. So credit dividends and credit income tax, and then we're going to debit the appropriation account. Let's just show you the ledger. So we've got our dividends account, which is considered to be a negative equity account, so that's why it's got the total on the debit side. The total here is 68,000 Rand. Alright, 68,000 Rand. To close off this debit, we need to record a credit of 68,000 Rand, and we're going to take this to not the profit and loss account but the appropriation final account. So if you draw your appropriation account, here we go, appropriation, you'll see just now that we will be closing off our profit and loss to the appropriation account as well, but we've got a credit on dividends, so we'll have to record a debit on my appropriation account of 68,000 Rand, and that's going to be referring me back to the dividends account. Good. Right, so we will do exactly the same thing for my income tax, which I'll close off to appropriation account by crediting the income tax and debiting the appropriation account. And once we've done that, we've effectively closed off all the incomes and the expenses to the final accounts. However, we have not yet closed off the final accounts themselves. So if I were to record all of these journal entries on the general ledger, it would look something like this. So you'll see here, we've got our trading account, we've closed off our sales and our cost of sales to trading. This is our first final account, right? This is the first one that we've got. Then we've got our second final account, which is the profit and loss account, where we've got all our other incomes here, and we've got all our other expenses that we've closed off to profit and loss. Then finally we've got the last final account, which is my appropriation account, where I take my dividends and my income tax. Now we need to close off these final accounts. We need to close off the trading account to the profit and loss account, the profit and loss account to the appropriation account, and finally then the appropriation account to the retained income account, and then we'll be done. Because if we leave it as it is at this stage, we will still have a balance on the trading account. You can see that the credit side is bigger than the debit side, which will leave the trading account with a balance, which is not what we want. Remember, when we close off accounts, we want our credit side and our debit side to be equal, otherwise the account has not effectively been closed off. Right, so how are we going to close off this trading account? We can see that the credit side is bigger than the debit side, so we can fill in the bigger total on the credits on both sides, 658,000 Rand, there we go. And we can fill in the same amount on the debit side, 658,000 Rand, there we go. To get my debits, which is currently only 387, to equal 658,000 Rand, I am missing a figure here, which is what we are going to calculate. Now it's going to be a simple calculation. We're just going to take the 658 minus 387, and that's going to give me my balancing figure. So let's do that. 658,000 minus my 387,059, that's going to give me the balancing figure of 270,941, and it is this figure that we're going to take to my profit and loss account. So this is going to go to, I'm just going to use an abbreviation, profit and loss account 270,941. So this was on the debit side. So on the profit and loss account, it's going to be recorded on the credit side, 270,941, and this came from the trading account. So we've effectively closed off my trading account to the profit and loss account. How did we do that? We had to debit trading account and credit my profit and loss account. And you will see that this figure here is the gross profit. It's the sales minus the cost of sales. So we've effectively taken my gross profit and included it in our profit and loss account. So let's record that journal entry. Well, let's just see how it looks in the general journal. We've debited trading with 279.41 and we credited my profit and loss with 279.41. Now we can do the same thing or apply the same principle to the profit and loss account. We're going to add up all of these debits and we're going to add up all of these credits. So let's start with our credits. If we add them up, 279.41. Right, let's grab a calculator here. 279.41 plus 481.200, 481.200 plus this 76.230, 76.230, and that gives me 828.371. Alright, so we can fill that in here. Well, this is my total. I can just write it in pencil. 828.371, because we don't yet know which side is going to be the bigger side. Then we add up our debits. Let's quickly do that. 27,000. You can do this with your calculator. I'm just quickly going to calculate that. You can double check me. And the answer comes to 651,607. So we can fill this in here. 651,607. Right, so we can clearly see that the credit side is bigger than the debit side. So we fill in the bigger amount in the total lines. 828,371. 828,371. Now for my debits to equal this 828,371, I'm going to have to fill in the balancing figure here, and again it's going to be the total credits minus my total debits. 828,371, 828,371, which is the total credits, minus my total debits of 651,607, and that's going to give me a credit balance. So this account actually has got a credit balance. So my credits, my incomes are more than my expenses, so I've got a net profit and not a net loss. The amount again, 176,764, 176,764, and this figure we're going to take to my appropriation account. You'll see that the profit and loss account gets closed off to the appropriation account. If we go back to our notes here, we'll see that if the net profit is greater than 0, in other words my incomes are greater than my expenses, alright, I'm going to have to debit the profit and loss with the balancing figure and credit my appropriation account, and vice versa if the net profit is less than 0. Alright, so I'm going to debit appropriation account 176, and I'm going to credit my I'm going to debit the profit and loss account, and I'm going to take it to the appropriation account. I'm going to credit the appropriation account 176,764, and this came from the profit and loss account. Now this net profit is what we're going to distribute between dividends, income tax, and retained income. But let's quickly first record this second final account closing journal entry. We're debiting profit and loss, and we're crediting the appropriation account. So here we go. We debit profit and loss with the 176,764, and we credit our appropriation account. Finally, the last account that we'll have to close off is this appropriation account. Again, we're going to add up our credits and add up our debits. You can immediately see that the 176 is going to be greater than the 68 plus the 53. So this is going to, the credit side is going to be the bigger total. So I can fill in 176,764 on both sides. And I know that the balancing figure is then going to be on the debit side, because the debit side is the smaller side. So the balancing figure is going to be here, and I can calculate that quickly. Take our calculator. We've got our 176,764, which is this credit amount right here. Then we're going to subtract 68 minus 68,000, because we want to minus all our debits, and we're going to minus our 53,029. 53,029, and that's going to give me the balancing figure of 55735, and this is the amount of the profit. The net profit was 176. Of this 176, 68,000 went towards paying dividends, 53,000 went towards paying taxes, and the 55,000 is what is going to be retained in the entity. That's going to move to be moved to the retained income account in my balance sheet. So my retained income has got an opening balance currently of, if we go to my trial balance, currently it's got an opening balance of 41,000 Rand, and we're going to add to this 41,000 Rand the amount of profit that was retained during the current year, which is retained income balance of 55735 that we got from the appropriation account. Right, so my final closing entry is where I move the net profit that is retained and I move it to my retained income account. How do I do that? If it's a positive amount that is retained, as it is in this case, my credits are greater than my debits, I debit the appropriation account and I credit retained income. And that's what we did here. We debit appropriation and we credit retained income. If we look at just a quick summary of what happened here, we moved all our income and expenses to the final accounts. The different incomes and expenses go to different final accounts. Our sales and cost of sales went to trading. All my other incomes and my other expenses went to profit and loss. Then my dividends and income tax go to the appropriation account. And then we had to close off our final accounts themselves. If we track sales, you can see that sales first went, sales is a credit total. Now to close it off, we credited the trading account. Then we closed off the trading account. Here we closed off the trading account. If we take a color here. So here my sales come in as a credit to the trading account. Then the sales will form part of this figure here, right there, as a credit to the profit and loss account. Then the profit and loss account gets closed off to the appropriation account. So my sales figure is now sitting in here as part of the appropriation account. Then we take some of that and we allocate it to dividends and income tax. And finally, my sales figure will be part of this figure here, which ends up in retained income. But in order to get there, it had to go through the whole process. First going to trading account, thereafter, first went to the trading account, thereafter it went to the profit and loss account, thereafter it went to my appropriation account, and finally it ended up in the retained income. Every time we closed off our final accounts, what we did was we totaled our debits and we totaled our credits, and we filled in the bigger total on both sides. As with our trading account, the bigger total was 658. Then we found the missing figure on the smaller side by subtracting the smaller total from the bigger total, and that missing figure is the amount that had to be closed off to the next final account. Right, then we did the same thing for profit and loss. Fill in, you calculate the total credits, which was 828. Then we added up our total debits, 651. The bigger one again was the credit, so we fill in the bigger one on both sides. We subtract the smaller one from the bigger one, and that's going to give us the missing figure on the smaller side, because we need to have our total debits and our total credits equal when we close off our accounts. Otherwise the account is not zero and it is not closed off. Right, so then you fill in the missing figure on the smaller side so that the debits and credits are equal and the account is closed off. And then we follow this amount to the account that we closed it off, and we do the same thing in the appropriation account. Finally, the total ends up in retained income.